Hello traders. My name is Elias Benjamin, and I'm here with T-Pockets. Today we're going to look at Australian dollar, Japanese yen, and what I call the bullseye trade. Okay, we have a clear descending triangle here on the daily chart. A clear descending triangle here. Though you guys should actually know that I do not trade based. In reality, I do not trade based on any of these trend line things. I actually trade based on a currency strength. I have a currency strength meter that I look at that provides that tells me an individual currency's strength, and I pair the strongest currency, individual currency, to the weakest individual currency, and I trade based on that. And as of now, the Japanese yen is actually the strongest currency on our currency reading. On our currency reading, with a reading of 7, which is the highest reading on our meter, and and uh, and the Australian dollar is the weakest currency on our reading, having a reading of 0, and 0 is the weakest reading you can get. And yeah, um, and yeah, and believe it or not, currently, as of now, the strongest currency is the Japanese yen, not even the Australian, not even, I mean, the US dollar. Okay, but as you know, things might change. As of right now, I think that the dollar is really pushing against the yen, but I'm not currently. I am in a yen. I am in a. I am in a US dollar JPY trade, but it's just to hedge some of my positions, because my real trading style is very, very different uh, um, um, from what I post here. But this is what we have right now in the chart is what I call a bullseye trade, because it's just beautiful. It's the strongest currency, Japanese yen, against the weakest currency on our reading, and we broke out of this. We broke out of this area here, this consolidation with a double top. What was happening here? I was actually holding a short all the way through all these days. I think I was holding an AJ short for like a month in other currency pairs. But then, patience. Our patients got paid. These markets are created for the patients, for the impatient people to pay the patient traders. Okay, so I held through, and we broke through, and now we are retesting this previous support, now turned into resistance, and also a psychological price, which is 80 yen per Aussie, 80 Japanese yen per Aussie. Yeah, psychological is a rounded off number price, which was also support here, but now it's resistance. So it's just a beautiful bullseye trade. Okay, let's go to the 4-hourly chart. Let's remove this. Let us go back. You can see that this zone, I took it off some of this week and the lowest week here, and now we got a perfect rejection of there, and now price is basically having like a sort of minor support from this area here, like having the Aussie is receiving support from this zone here, as it was a resistance. It was support, resistance, and now it's support. So what I'm expecting is with some volatility expected to come into the markets tomorrow, I'm expecting excuse me. I'm expecting this maybe to maybe to range in here until Powell speaks tomorrow, and once Powell is done, we make new lows. Okay, this is what I'm expecting in here. Otherwise, we could just go with this path, with something like this, maybe something like this, create all sorts of divergences on the RSIs, and then touch the trend line, and then dip lower. So these are the two outcomes we can look at on this pair. So yes, we could, to be safe, you could be looking to have your stops maybe above, let's see this, I don't think we're gonna come to these prices, so maybe just the thing is that the Aussie dollar sold off so sharply, there isn't much order blocks you can like look at to be potential resistance, strong resistances, or pivot points in the future. There's only this one here, but it's too far. I don't think price will go there. So but this here, if you bring here, maybe it's just your stop slightly above this 80.40 level. Okay, so these are the two outcomes I can be looking at right now. Something like excuse my thing, and maybe just like this. All right, or it's a what ratio? Risk reward. It's a 2.6 risk reward ratio. So yeah, so basically since the Australian dollar is the weakest currency, and we are pairing it against the strongest currency, if if the Aussie is going to make some significant movements to the upside, I'm gonna catch it with for example, since the reading on the Aussie dollar is currently 0, I'm gonna catch it on the currency that has a reading of 1, just slightly stronger than the Aussie. So I'm gonna catch it on that pair. So I'm just giving you a little bit of a hint on how I trade, and yeah, if you guys want to know more on how I trade, and you can catch me on Telegram with the same username that I use here, Deep Pockets. Just search on Telegram the same name I have, username I have here on TradingView. Okay, guys. So all right, this is what I have for you guys. Let me take this back to the daily chart so I can have a nice thumbnail, and we can close off this video. So thank you guys, give me a thumbs up, and see you in the next video.